The non-farm payrolls. Sorry about the brief technical adjustments that I was just doing. You know, this is a live video, so we sometimes have a few technical difficulties going ahead. So let me introduce myself. My name is David Kinley. I'll be taking you through the non-farm payroll predictions and the expectations and what the opportunities are afterwards as well. But before we go through it, let's just go through a quick disclaimer just to make sure we're on the right page. So foreign exchange trading in investment in derivatives can be highly speculative and result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public and only risk capital should be applied. This webinar is provided for information purposes only and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of commodity, security or investment, nor should it serve as a basis for any investment decision. Orbex Limited does not guarantee the accuracy or completeness or information of analysts as supplied. So without further ado, just checking now what the expectations are for the next, I've got a few notes here for the next few, times. We had a very big miss on the last NFP last time around. 194,000 job numbers coming in at over 500,000 was expected. Now we've got 450,000, which is what analysts expect at the moment, but it is looking like it might miss again, early reports are saying. So we'll see if that comes into fruition and how negative it will be going forward for the American economy and the job numbers as well. The Federal Reserve had just said that they're going to limit their bond buying program, which was roughly, let me just double check that, up to $1.2 billion every month. So that's quite astonishing as well. And that will see if we're going to have another round of anything, $120 billion a month stimulus program. So we'll see if that has anything to do with, the job stimulus that's going forward as well. And other consensus that are looking, ADP figures, initial jobless claims, weekly initial jobless claims as well, we're going to look into. So let's just take a quick look at the charts then and the expectations at the moment. So, as I said before, the job number came in at 194,000 versus 450,000 last time around. As you can see here from the chart, though, we're having we had a very buoyant number, over 1 million a few sessions ago. But as you can see here, it's dropped quite heavily downwards. And this is a very significant number that it dropped down below 200,000 as well. The last time it did that was obviously when it went into negative territory, and that was just at the back end of 2020. So very significant numbers there. So we'll see if there is a bit of a miss again. If there is a miss, I think 200,000 to 250,000 job numbers is considered okay for the Fed to continue its tapering, and also the fact that the American economy is still growing slightly, even though we are looking at more or less job creations on a weekly and monthly basis. So ADP figures as well beat expectations by 171,000 this week as well. That was quite a good bullish move for the dollar. So we'll see what we're going to be looking at in the next few trading sessions as well. And also, as you can see, what I'll be looking at is the pattern that we've coming up to 1 million and dropping lower, then coming up to, just over 1 million, dropping lower. So will this pattern continue for the next few trading months as we get into the back end of 2021? We'll have to wait and see if that comes into fruition as well. So we've also got Canadian unemployment and employment changes as well the same time as the NFP. So the loonie, the dollar CAD currency pair, will be very interesting to look at as well as we go into the session in roughly 20 minutes when we hear the first glimpses of the NFP. So like I said, early reports are looking at a bit of a miss on the 450,000 expectations, so expected number that's hopefully going to come in, but we'll see if we're going to have a bit more of an upswing. As I said, 200 to 250,000 is looking to be something in the ballpark region. And obviously the NFP is a little bit earlier this time around, even though Europe's moved its daylight savings time, America moves its daylight savings time this weekend back 1 hour. So we are just 1 hour apart, 1 hour difference, sorry, from the last time around, as we go into the next round of the NFPs in December. So For very, very significant. Again, unemployment claims dropped to another low of 326,000 this week. As you can see here from the chart, we've had this downward spiral for unemployment claims, which is very, very good for the American economy. It did pick up a little bit in the last couple of weeks, but then it fell lower. The most important thing is keeping below this 500,000 barrier, which again will be very, very significant because it's been above it for so long for the most of 2020 that keeping below this 1 million first of all and then 500,000 after that was very, very significant as well. Lowest level in a month, and obviously ends this 7-week high of 364,000 in the previous period. Like I said, ADP private businesses saw their highest jump in over 3 months. And over the 500,000 K mark, which is again very, very significant. ADP private jobs, they are very, very buoyant in America. It's not only general unemployment claims, it's ADP figures as well. And we've got some sentiments that we'll look at shortly for leading and laggards, like we usually do on every NFP, just to see what the potentials are. Annual inflation rates in the US eased to 5.4%, and that was edging up to a 13-year high. The Fed obviously wants to get the inflation level down to 2% as soon as possible, but it is probably having a little bit of a problem with that. With the last time around that we saw, recently when we saw the Fed saying that they're going to wind back the 120 billion a month stimulus program. So they're saying that they've achieved their target of the economy getting back on track, but it is looking like it's going to probably still keep up with the inflation rate as pretty high, above 5% at least for the next few months, until it can really have a more concrete move back down to 2%. So that will be very, very interesting to see as well. The committee said it was prepared to adjust the pace of tapering process depending on the economic outlook. So again, very, very strong words from the Federal Reserve, but it has to see if it's going to be realistic and come into fruition as well. Obviously, as you can see here, inflation has risen since the start of the pandemic here at the beginning of 2020, and it's gone from 2% to 4% to almost 6%. So that's very it's not a very good sign of a recovering economy, but this slight dip that we've seen at 5.4%, it means that it hasn't gone any higher up to the 6% mark. So we'll see again if that comes into fruition. Since the great crisis of 2008, we haven't really seen this kind of inflation. So we'll see if what that can actually mean for the Fed and tapering when they meet again, and depending on these job numbers as well, if it's going to happen. So these are the things that we look at when doing a preview for the NFP, leading and laggard information as well. So ISM, manufacturing, non-manufacturing, what are their figures? How is the manufacturing industry in America doing? We had lots of industries in America back in the 80s and 90s that were flourishing, but obviously now they have actually declined quite significantly. So manufacturing numbers bring in quite good job reports as well. So that will be quite interesting. Challenger job cuts and jobless claims. We touched upon jobless claims on the weekly amount. Challenger job cuts as well, to see how many people have been laid off in America, forcefully at least. ADP, private jobs in the private sector, consumer confidence, CCI, and University of Michigan, consumer confidence going on for over 80 years now, really gives a good indication of the interviews of some students and other peers about where the economy is heading, and it gives a good indication because it's been so long that it's been going on for since the 1960s. So that's very informative as well. Leading indicators as well, treasury yields and equities. We've seen what's been happening with the Dow Jones recently in the index market, creeping over 36,000 for the first time in the history. When it creeped over 35,000, economists and traders were quick to jump on board to say it's going to hit 36,000 pretty quickly, and in fact it did. It didn't take long for it to reach those to jump that amount of points back to up to the 36,000 region, and then break it, and actually trading above it. So we'll look at the chart shortly to see what the consequences and the opportunities are of such a big bounce. And also crude oil prices, bouncing around the $80 mark. Did have a bit of a hit yesterday in yesterday's trading session. It fell a few dollars down. So we'll see if that's going to have a V-shaped recovery back to the upside. If it can, then we'll be looking at roughly about $85. A lot of investors and economists have said that they are looking to see oil jump to $100 a barrel by the end of the year. But, with the conference of parties, which is happening in Scotland currently, with all the world leaders gathering together to lower emissions to try to get them to net zero by the end, 10 or 20 years time. We'll see if that actually has a hit on oil prices and gas prices, actually, as some of the big Gulf states such as Saudi Arabia, Qatar, Bahrain, and the UAE look to possibly lower emissions, but they're not ruling out completely not using oil and gas for the foreseeable future. So we have to see if these net targets are realistic in the long term and if they're going to come into fruition, because let's face it, a lot of countries have been saying they're going to try and aim for net zero emissions for a long time, but India have come out to say that this is not going to be likely until at least 2070. So that's quite a realistic target, rather than 10 or 20 years time, when a lot of diesel and gas powered vehicles, let's say, are still going to be on the roads and in the air. So if that's going to come into fruition, we'll have to wait and see. So we'll just see what the indicator list is looking like. So this week we've had quite a few leading and laggards. We're going to see if that actually comes up into fruition. And, I'll just be looking at the bottom at the moment, Treasury yields, equities and crude oil. As I said, equities are up, crude oil is bouncing up at the moment, and Treasury yields are slightly down. So again, we'll see if that comes into fruition anytime soon, because then we'll see if there is going to be any indications of a move higher for all of the commodities that we're trading on, and also not to mention the precious metals and the major forex pairs. And obviously with the major forex pairs fluctuating, we look at the miners as well to see if there's a bit more volatility obviously on minor pairs, just to look at. But if in the long run, we'll see if that has any implication on the next jobs number. So looking at the interest rates for all the countries here, we had the United Kingdom's interest rate decision yesterday. It was to be expectant that the Bank of England were going to raise rates for the first time since 2018, but actually they stuck to the 0.1% for now, which is a big indication the nation is not ready to lift these COVID restrictions on interest rates and other financial matters. So they are treading precariously, and we'll wait and see if they actually take the next step, or what is the first nation to take the step in the direction, or in the right direction, to lift rates even higher. So as I said, the US economy last time around, 194,000 jobs, which was quite a meager number, and we'll see if we can really beat expectations there. Employment really did gain in the leisure and hospitality sectors, which it has been doing for month after month. These sectors have opened up, obviously, with the use in America of no face masks, and also the fact that because there's been such a high amount of inoculations over the last, when the jabs did come into fruition, did become readily available and licensed, we have seen an upswing in these particular sectors and job gains as well. But we are looking at almost a 5 million drop in unemployment since the pandemic hit in 2020. So this is a figure that Joe Biden will not want on his resume as he enters his second year in charge of the United States in the Oval Office. And obviously he's got a little bit of a strange concurrence at the COP26 meeting, which was what I spoke about earlier, the Conference of Parties, he did say that he's looking for a greener future, but he did not put a stop on oil production at the moment. And, you have to look at big oil companies in America, such as Chevron and ExxonMobil, that have seen their revenues grow tenfold over the last year with the demand of gas and oil that is needed, especially around America. So again, something to look out for as well when we are looking at the whole picture, not just for the NFP figures, but the whole picture of the American economy pushing higher as well. So something to really look out for. And choosing the best pair to trade, just got this off, just had a look now, and we're looking at a strong euro pound at the moment, and a little bit of a firmness on the dollar and yen and the Kiwi. So that'll be interesting. Aussie a bit down as well. That'll be interesting to see if we are, if there is a good number today for dollar, then a good trade would possibly be the Aussie, the Kiwi, or the Swiss franc. A bad trade would be euro or pound to go along with this is, and vice versa. If we're going short, then it will be the other way around. But these are just like little guidelines that we like to look at as we go through the NFP, which is roughly 10 minutes away. So let's just go a few, let's say, red flags or guidelines that we like to look at when we're trading the NFP, especially, and protect your risk capital. Obviously, risk capital is very important because you don't want it to drop too much. If you do have a bad trade, not to drop below 50% of your invested capital, because it's very hard to recoup that and then obviously go on to make a profit. You've got to recoup the 50% and then hopefully make another 20, 30, 50, 80% on top of that, depending on your profitability target as well. So, just something to look out for as we go into any kind of volatile trading, and not just the NFP. So avoid trading during NFP as volatility is high and the whipsaw effect could lead to losses that exceed profits. So this is just the basic step of, if you don't want to be in a high volatile fundamental news impact zone, then avoid the NFP at all costs. There is a lot of big whipsaw effect where their prices can shoot up and down within a matter of seconds based on the news coming out of the event. And this could affect your trades quite significantly. And actually, it could actually miss your take profits and stop losses, which we'll look at shortly on the charts. Number 2, apply protective stop loss and take profit risk management measures in order to bypass emotional hurdles. Now, we've all been there and done that. We've all got emotionally involved in a lot of the trades that we are trading on because we think, gold has gone up by $10. Surely it's going to come back down again. We put a sell position in, it keeps pushing higher, and then, we receive a margin call or even a stop out, unfortunately. And the emotional hurdles is the fact that you stay in the trade because you believe it's going to go down, and you haven't actually put in any protective stop losses or take profits. Take profits are just as important as stop losses when trading, because even if you're in a profit, there is a time to stop the trade so you don't get that whipsaw effect. So you close the state, you bring the stop loss lower or higher depending on what trade you have, and then the take profit can hit so that you can take that profit cleanly and not have any other emotional hurdles involved. So very important as well. Number 3, close out all positions, if any, ahead of the release in an attempt to divert from high volatility risk. So going back to point 1, if you want to try and avoid trading, just close out all positions just in case you do get this big whipsaw, big fluctuation in price, which could actually destroy not only your trade, but your trading strategy for the day or even the week. Obviously, the NFP is always on a Friday, so the emotional hurdle going into the weekend can actually affect your Monday trade as well. If you are swing trading or day trading, whatever trading style you have, it could actually be very, very detrimental for you as well. Number 4, hedge your positions, if any, ahead of the release, in case your risk is minimum because you trade long term and the stop loss is far away from being hit anyway. So hedging is a very good strategy if it works for you, but just make sure that even if you are hedged, if the market does do a whipsaw effect or if it does a very, very big move in one direction, you can still hit your margin call and possibly a stop out if you do not keep an eye on your trade. So bear in mind that hedging positions doesn't always mean you will not hit a margin call if the market does severely go against you. So that's something else to consider as well. Also, if you're eager, number 5, if you're eager to trade despite the warnings, do let the market calm down before entering a trade. And that way you stop the heated environment and have a clearer picture heading towards as market noise is reduced. Now, market noise, that's just the potential upswing or downswing of noise in the market where there is still ripples of effect after the news event has stopped. So this can actually go on for up to an hour or possibly towards the rest of the end of the session after such a high impact news event such as the NFP or any kind of Federal Reserve release, interest rate release, inflation update. These big news events can actually go on for quite a long time. So, this is something to look out for when you are trading, just to let the market noise calm down before entering trades, because there is still a chance that the market could move 50 to 100 pips in one direction, even though the market, the fundamental news has actually stopped. Okay, number 6, analyze the data post-release, so afterwards. Without supporting employment, wage and employment data, any directional trade is at risk of a reversal, despite the NFP being over, as post-effectual bias depends on all three. It actually depends on more if you take into account what else is going on. Like today, we've got the Canadian news as well. It doesn't only affect the American dollar, but yeah, analyze the data post-release. If you want to get into a trade after the event has happened, then make sure that the data post-release is actually correct and that you're not having any surprises as you enter into what is known as the grey area, where anything can happen after the news event. And finally, pay attention to divergence between actual and consensus figures. Gaps of 20 to 30k are not considered very effective. So for now, for example, for last time around, we had the expectancy of 500,000 jobs or 450,000 jobs being added. We got 194,000. That was quite a big miss, over 300,000 jobs, or give or take. But if it was only 20 to 30,000 job miss, we probably wouldn't see much of a move in the market, because it became in as expected. And this means that this particular gap of the expectancy to the actual is not really going to affect the market very much. So just keep an eye on that, as divergences can actually, big divergences can move the market usually pretty well, but small divergences normally don't. So for example, now if we get a big miss, then the 450,000, we could see a very big move in the market. However, if we don't, then we could see maybe even less as we look towards the NFP, which is just a few minutes away. So that's the end of the presentation and the guidelines. So I just want to bring up a basket of currencies that I look at, and assets that I want to just look into to see what the opportunities are. So on the euro dollar, first of all, I'll just take you through these quickly. Euro dollar, I've just been looking at the fact that we missed that 116 mark quite significantly. We saw this big drawdown on the euro dollar, very, very strong dollar there, but the 115 handle is where I'm looking at next. I'll just put a point of note, because the 115.30 handle is roughly where I was expecting a little bit more of a move to, a break there would give me an indication that it's going to probably move a little bit further downwards to the previous line. Pound dollar, we had a lot of pound disappointment with especially with the fact that the Bank of England kept its interest rates at 0.1%. So we saw quite a big collapse there. Dollar CAD, the loonie is looking to be something to be traded on, because we are looking at the fact that there are some unemployment and employment changes at the same time. Aussie dollar as well. Aussie has been quite weak in the last few months because of the fact that they had more lockdowns in Australia, but they are emerging, and hopefully there will be a little bit of an uptick in prices there. Dollar yen, we'll keep an eye on that, as well as we are looking to see a move back up to the 114 region, which will be quite significant, because then we can really start looking at the push to the upside, and we'll see if that has any bearing or any effect on the next prices for the yen. Gold has been very all over the place in the last few trading sessions. I moved to, I usually go for $10, just move that so it's a little bit more clear. So $10 price spikes at the moment. And at the moment, I'm not seeing anything in the way of, just take the arse line off quickly. So I'm not looking at anything in the way of a move back up to the 1800 handle at the moment. What we saw in the last few trading sessions was good support at 1760. And then we had a move up to 1770, as you can see here, good support and a bounce. Broke through 1780, and now we had some good support at 1790 before another test at the 1800. So we'll see if what happens with gold. Very interesting to trade on the last few months especially, and very good opportunities. We need to talk about the Dow, because you know, since it hit 36,000, I'll just put this on a daily chart. Since we hit 36,000, I mean, look at the grand accentuation. Okay, we have had earnings seasons recently, which has seen, you know, the likes of MasterCard and other big companies push the Dow and the S&P and Nasdaq to fresh highs, but the Dow is looking at record highs again and again. So we'll see what happens with that. US index, I just want to point out as well, we are trading above 94 for the first time in a while. Well, it's been cemented above 94, sorry, for the first time in a while. You know, we got up to 94 a couple of other times, but as you can see, we have had heavy pressure, but now we're trading it up almost to the mid 94 region. So we'll see what happens with that, as well as we approach the news coming out of America shortly. And let's just see. So we've got non-farm payrolls at 531,000. So very good number there. So exceeded expectations of 450,000. On the Orbex Telegram, I did create a poll recently to see if it's going to exceed expectations or meet consensus. The majority was that it would actually exceed expectations. So that's very good for the dollar. So as you can see here, we've cracked the 115.30. So I'll be expecting that we move a bit lower to the 115 to test that region at the moment. Not too much in the way of divergences, let's say, you know, 450,000 versus 531,000. Okay, almost 100,000 jobs added. However, we'll see how the market reacts shortly. There's a big switch around on the US index as well. Let's just have a quick look on that, the 15-minute charts. I'll just see once that updates shortly. And also, you know, we're looking at the Canadian news. We'll go back to the Dow Jones on the 30-minute. So as you can see here, market's really moving now, and gold falling further. So as I said, I didn't expect a move to 1800 at the moment. It would probably be a little bit of a stretch too far for gold to start testing 1800 again anytime soon. So it was actually quite predicted that gold would slide today. Dollar yen moving up to that 114 handle, but having heavy resistance, unfortunately, for bulls. I did expect a test at 114, but unfortunately we are having a little bit of a retracement now. Let's just check the other news as well. For Canadian, unemployment rate came in at 6.7% versus 6.8, so not too much in the way there, but obviously 1 percentage point for the whole of Canada could be a big number. And employment change of 31.2 thousand versus 50,000. So yeah, unemployment rate for America as well, 4.6% versus 4.7%. So a good day overall for the US economy and the dollar itself. So we'll see again, like I said, we're going to have a test at the 115 for the euro dollar. Cable hasn't really transpired too much. I didn't really think there would be so much of a move on cable, as it's got its own problems with the UK economy. It's obviously got some Brexit problems to sort out as well, which we'll dive into on another session as we do more and more hot topic webinars coming up. Dollar CAD, as you can see, a little bit of a mixed feeling because we've got good Canadian news and good dollar news. So we've only seen a move roughly let's see, just over 10, 15 pips. So not too much to shout about there. Trying to push higher at the moment, the dollar over the Canadian dollar. So we'll see what that transpires to. Aussie as well, crashing further lower. I mean, if you see the descent of the Aussie since, let's see when this was, just since the end of October, this is only, if you think about it, a week. So we've crashed down almost 200 pips in a week. So that's quite significant for the Aussie. And we'll see what the consequences are there as well, because it's quite significant that the Aussie is something to sell in the last few trading sessions. Very, very good opportunities as well. Dollar index, it was difficult to say if we're going to get up to 95. We haven't been up to 95 for quite a while. I'll put it on the weekly chart now. Let's just put a number on that figure, 95. So the last time we hit it was, well, it crashed through, and that was in the middle of the summer in June. So, very, very, a lot of pressure on the dollar index over the last few weeks. Last few trading sessions. We have seen this growth since the beginning of May. But that was 2020, the summer of 2020. But since the middle of this summer, we have seen the accentuation, but with tapering and with the bond buying that the US economy have been doing for the last year or so, getting America back into heavy debt. When will these repayments have to be done? This will be the big question now for the Fed. As you can see, more upside, more record highs for the Dow. Very, very significant. Very, very good numbers there for the Dow. 36,233, 234. We are hitting record high after record high. You could say at the moment, we'll be looking for divergences on the RSI, the MACD and momentum, just to see if there's going to be a little bit of a come down, because, with every big rally, there could be a bit of a move to the downside. But as you can see here, we've got a bit of a hummingbird action here, which is where prices reach a peak, fall down a little bit, reach another peak, fall down, as you can see here. So there is an expectancy now. There could be a little bit of a move to the downside at some point, but we'll have to crack these previous levels here, roughly about 36,160, for it to really start falling downwards. If it does touch there and start bouncing higher, then you could expect further record highs for the Dow. So, we've got a lot of interested investors in the Dow as well that we like to keep an eye on to give the investor the best possible communication with the pairs. As you can see here, the market's still moving. Dollar CAD as well, that's starting to come back a little bit against the dollar. As I said, it's very good in numbers for Canada with unemployment and employment changes as well. So that was expectant that there would be a bit of a tussle for who wins out on the NFP. So as you can see here, since the NFP's come, we've had a whipsaw of 30 pips, and we're still driving lower at the moment. So let's just take a look to see what other opportunities there are. So as I said, euro dollar, I'll be expecting to see possibly a test at 115. We are retracing quite fully now. And let's just bring this out for a better outlook and zoom in. So yeah, we are looking at a move to a full retracement now. So we've had a move of roughly 25 pips. And now we are testing that 115.30 region once again. If it can break above that and stay above, we could see this V-shaped recovery from from earlier in today's session at 115.60 approximately. However, if we do cement our prices lower at 115.15 roughly, then we could expect another move down to 115 round, which would be quite significant. So we've had this whipsaw effect now. Gold is starting to recover slightly, and going back down to 117.85, it was a good position to put a buy in if you are scalping or just swing trading slightly. It is always a good bet. So a good bid to look into that as well. Cable, not really much in the way of movement. 25-30 pips, not really too much to shout about as well. So I think the dollar CAD is something that we're going to keep an eye on for the remainder of the trading session. Very, very buoyant figures there. And always remember that when you're trading the NFP, as the guidelines suggested in the presentation, just make sure that you wait for the market noise to calm down. But if you are in trades during the NFP, then do be very, very vigilant, have your stop losses and take profits, because, you know, with big moves in the market, for example, if we go to the minute chart for gold, as you can see here, in the first minute of the NFP, we had a move of, you know, almost $5, which is quite significant on gold, and then it dropped down to even well, almost $10. So within that target, you know, even if you had a stop loss or take profit, if there's a big gap in the market due to the fundamental news releases, there's a possibility that it might not take your stop loss or take profit. And what do I mean by that? Well, it means that if you had your price here and then the first available price was up here, your stop loss is in the middle, it's going to bypass your stop loss and hit the first available price. And then that's when your trade, well, that's when your pending order will be closed. So just be aware that not all prices, even though this is a full candlestick, it doesn't mean that the price hit every tick on the way down. Candlesticks are made up of ticks, and it doesn't, or prices, and it doesn't mean that it met every single price on the way down. It could have gone from here to here to here to here. So that means it could actually miss prices on the way, because the high impact fundamental news events are so volatile that it could actually miss your pending order. So this is another important thing when trading on on these fundamental news events. So just to give you that example again, if we look on this candlestick in the middle here, on the white one, we set a take profit at 1790. Sorry, we set a take profit at 1791.12. The first available price, the open price was up here. Let's say at the top of the wick, 1793.84, and then the first available price was 1790.29. Obviously, from here to here, that's the first available price. So the stop loss or take profit, whichever direction you're trading in, has been missed, and then that accounts to slippage and also to a gap in the market because of the fundamental news event. And then that's when there could be a possibility the pending order was not hit at the price that the trader wanted. So just something to look out for as well when you're trading impact news events like this. So let's see, a very, very big candle there for gold. Not a big body though. $12 roughly at the moment. The candle's very, very thin, so very, very small. And US index did have a big spike, now retracing. Very, very typical for high impact news events. For if there is a big move, for candles to retrace 50, 80 to even 100% and go in the other direction. As you can see here on the dollar Canadian, we have had this pretty much 100% retracement, same as same as cable, almost the same as gold as well, and euro dollar. The Dow is keeping on pushing. If it can hold above the previous false breaks here, the previous spikes, we could see another push up higher, and who knows, to that magical 37,000 handle, which we haven't ever seen before. Well, we didn't see 36 and 35,000 until a few sessions ago. So it's not something that is unlikely at the moment. So in closing with the presentation, we'll just see what the opportunities are for the next few hours before the trading closes. Obviously, America has just opened recently in their markets, and the American market is closing slightly early tonight, as I said, because they shift their daylight savings this weekend. So it will be business as normal on Monday, when we see the daylight savings time shift back to the rest of the world. And again, let's just see, when the NFP does happen on a Friday, traders usually start their weekends early as well, so there could be a little bit less volatility as we close out the evening hours on the trading session tonight. So volatility might be down to a minimum as well. Obviously, the highest volatility is during the European and American sessions because there's more traders in the market, and obviously there's more there's more pricing in the market as well. This is why during the Asian sessions and the evening sessions, we do get very flat candles because there's not many traders in the market. But again, as I said before, we'll be doing weekly webinars shortly on how to trade and what to look out for. So stay tuned on our website for that, orbex.com, to give you the most the best trading experience that we can deliver. So gold will be looking very, very opportunistic for the rest of the trading session. It can swing either way at the moment. As I said, we've crashed through the 1790 handle and it's hovering around there at the moment. As I said, 1800 will be a little bit too far for the yellow metal for the rest of the trading session, I believe. So it would be a little bit too much of a stretch there. Dollar yen, looking at the 114, looking at heavy resistance there at the moment. So we could look for another move to the downside on dollar yen as well. And obviously keep an eye on the US indexes, not just the Dow Jones, but the S&P and the NASDAQ as well. As I said, earnings season is still upon us. Really, really buoyant readings for a lot of stocks, even for Qualcomm, IBM, Intel, these stocks that a lot of traders don't usually think about, not just the FANG companies, Facebook, Apple, Amazon, etc. We're looking at really other stocks that are not always in the headlines. So keep an eye on the earnings season calendar as well for stock earnings, because it has been a very, very buoyant earnings season for the for all indices and stocks as well. So just look on that. So yes, in closing the presentation, just like to say thank you very much for tuning in, and stay tuned for more webinars coming up on our website orbex.com and on our social media channels, and we'll be able to deliver the best fundamental action that can affect your trades, open or closed, and to give you the best opportunistic and advantageous trading experience as we can, delving into the basics to intermediate to advanced trading, and also what to look out for, not just the guidelines that I spoke about earlier when trading fundamental impact news releases, but for trading all types, whether it being day trading, weekly trading, or even just getting in and out of the market with small scalps. What are the consequences and repercussions, and what are the opportunities as well? So thank you very much for joining me once again, and we'll speak next time around on the NFP next month. Bye for now.